Hello and good morning. I welcome you to the morning meeting today on Monday, the 5th of March 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers. So yeah, we want to have a look at the market opening and how things are going after the election in Italy, after the Social Democrats here in Germany voted for a new grand coalition here between the Christian Democrats and the Social Democrats, and how things are in general developing around the fears of a trade war after Donald Trump mentioned quite directly into the weekly close on Thursday already, in fact, that there's a chance of I'm just missing the English word for this. So in Germany we call this Importzoll. One second, I just have to look it up here. One sec. Import tariffs. That was tariffs. So all in all, it's I mean, it's not surprising to see volatility, but I have to be honest, I'm surprised by this kind of volatility we've seen in the DAX here. So this is really big, because right at the start we came in weaker, so we closed around 12,000 points, and then the DAX pushed as low as 11,730 points. That was already before the spot market opened, before Xetra opened here. Only then to see a huge reversal, and now the DAX pushing back towards and above 12,000 points. And so this is like a roller coaster, let's say, but it's difficult to explain based on what happened, because in Italy, the 5-star movement here from Beppe Grillo, for example, came in as the strongest party. Now they have, in Italy also, they have trouble to form a government here, to find a coalition between all the parties there who are potentially willing to form such a government. So now the thing is that this was something we could expect already before the weekend. So nothing new here on this front. Then look at the Social Democrats. All in all, you usually in Germany expect a yes from the Social Democrats and their party members. You usually expect the DAX to come in bullish. Not saying that this will be a sustainable move then, but usually we know that such political decisions here have short legs when it comes to trading, respectively the exchanges here, and the positive impacts such or such decisions can have on the market. So usually you expect the market to come in bullish, not that bearish, and so it's very difficult to say what's the reason for that. But something definitely we can agree on is that the DAX is losing steam on the downside, and the push lower here with from a technical perspective below 11,900 points. I mean, in a quite thin market environment, and the significance of this level around 11,900 points is definitely something we've mentioned several times in the past already. And so the acceleration here on the downside wasn't that surprising. But now the thing is that it's obviously a potential fake out, and there's a bullish divergence now forming, and this could be the start of a bigger corrective move, because now I just wonder what's the reason for that. And I think it probably makes sense to look here at the developments around those import tariffs mentioned by Donald Trump last week on Thursday already, and then looking back at what happened at the end of January here, when we've seen the last ECB meeting. So we remember that there was also a comment from Steven Mnuchin here in Davos one day before. It was on a Wednesday, when he said that a weak US dollar is not necessarily something negative for the US economy, and that was interpreted as a very, very aggressive down-talking approach from the Trump administration here and Steven Mnuchin, the finance minister. And the Euro USD back then attacked, as you can see in this chart here, attacked the region around 124, and then pushed higher above 125 on Thursday, the 25th of January once Draghi spoke. Now the thing is that Draghi was very direct and not as neutral and objective as you usually expect the president of a central bank to be honest. And so with this said, and remembering the comments here, I mean, back in January, it would have been kind of counterproductive, let's say, that or if you attack the finance minister of the US here and then start to down talk your own currency several seconds later. But now things are completely changing. So with these comments from Trump, we have seen a reaction from Brussels already. And I think it's not just Brussels, but it's also China here reacting to those tariffs. And the thing is that I think that there's a risk right now in the market that somehow there could definitely be kind of a trade war. And not sure if this is really Trump's intention, but the thing is that with the ECB on Thursday, now the ECB could start an attempt to somehow aggressively downtalk the euro, even though it wouldn't look like as if it's kind of a revenge, let's call it, for those comments we've heard from Trump last week. But it's more like that they would come out. Those attempts to downtalk the euro here in this case would probably come out as something the ECB has to do because of inflation coming back since even though WTI crude oil here is still pushing higher, but inflation in the Eurozone is not picking up significantly. And so this could be a good reason for the ECB now to come out with with a more dovish stance in their statement. And if you remember that then I think this could be one reason why currently the DAX sees some strong reaction here on the downside. Somehow I have the feeling that we could see at least a short-term revival, even though everything below 12,600 points is bearish. But I think there's a good chance, especially if this really develops the way I described it, that this could push the DAX significantly higher and significantly back above 12,000 points. Probably not necessarily today, because I have to say something. I'm flat myself, so I would have started out the trading day on the short side, but didn't take any trades because I wasn't really sure what to make out of these developments. And there's usually kind of volatility after the weekend. And then, I mean, you have still lots of time to position yourself afterwards. I think the decision itself wasn't that bad. If you look at the trading range we've seen so far, we're talking about 300 points within the first 3-4 hours of trading this week. And so definitely visible that there's huge volatility, and this is a market environment I really don't want to be positioned in. On top of that, I mean, now the thing is, I would have been short, so I would have probably already heard the cash register ring here when the market pushed lower, only to see now the trade developing against me and potentially stopping me out then. And so with this in mind, I'm flat for today, even though I could imagine to trade alongside the upcoming days, mainly due to the fact that here there are signs forming on the horizon, which probably show that the market, in this case the DAX, could probably, after its approach to attempt to attack 11,900 points, could reverse now and probably push more significantly back above 12,000. So yeah, this said, let's move on. Let's have a look here at the euro. So if I talk about the DAX being bullish, well, I think there's a realistic chance that if such an attempt is started from the ECB on Thursday, that this could then significantly push the euro lower, even though currently I would favor the long side. I could imagine another attempt to break above 23.50 here. This is the red dotted line. So from an intraday perspective, long engagements seem to be more attractive, even though or with the target then around 124, probably is slightly above that, 124.50. Nevertheless, I see some bigger downside potential if the ECB really starts a down talk attempt here on Thursday then. And in this context, the region around 125.50, 122 could once again be a level to watch, and a potential region which could be broken and then result in a further acceleration on the downside in the euro. So Let's have a look here at the dollar Japanese yen. Very unspectacular start into the trading week. Let's see what to make out of this. I think there in fact two possibilities now. We're going up or we're going down. Oh, so that's surprising. No, the thing is that somehow with the comments from the BOJ here that they could start to, or that they are currently somehow considering a more restrictive approach in their monetary policy, something which could strengthen the Japanese yen further. And one of the reasons why I don't necessarily see, if we now find first support here around 105.50 and see a market correcting some of these losses from the last trading days, I don't necessarily consider a market going back above 107.50, 107.80 here to be positive, but really to really enlighten the overall picture and to make it more positive in dollar Japanese yen from a short-term perspective. I only consider the market moving back above 110.50 to be really relevant. Till then, I consider the overall mode to be short. Again, we have some potential to see a corrective move. Nevertheless, I right now consider such a bounce here to be good for a sell the bounce then, instead of seeing a huge revival and reversal here. Again, based on the fact that such trade wars also somehow enrich speculations around potential another down talk attempts from the Trump administration. And as seen with München here in Davos, the thing is that they obviously are not really caring about the thoughts from other trading partners right now, but really put America first. And with this said, there's a good chance that the US dollar sees another leg lower, probably especially against the Japanese yen, whom I consider to be probably quite positive for the upcoming days and weeks, mainly due to the fact that, again, there is a more restrictive approach from the Bank of Japan on the horizon, which can be seen. So, and finally, let's have a look here at gold. Very interesting also here that we've stabilized above 1,300 USD per ounce, seeing now push back here. Anything in terms of trade wars, fears around this, market forces fueling speculations that there could be an escalation between the US and China especially. All this is definitely positive for the for gold. On the other hand, negative for the US dollar. We've obviously already seen a quite strong revival of gold here on Thursday. And now the thing is that any pullback towards 1,320 is potentially long trigger. So everything above 1,300 I consider to be long. And my overall target stays the same around the current yearly highs, 1,360, 365 here. Potential target which we could then aim for if the market really finds here another long trigger and then pushes higher while the US dollar is probably sold again. Nevertheless, the question is, will the US dollar be weaker? I think chances are higher, probably especially against the Japanese yen. But again, with Thursday and the ECB coming, I have to say that probably against the euro here, there's a good chance that the US dollar can't really see some bearish momentum here, and euro is still pushing then significantly back towards 125.50, but instead that the euro sees some further weakness because there's a more aggressive approach to down talk the euro then from the ECB. That's something we definitely have to wait for. From my end, it's pure speculation that this could happen here, that the ECB starts such a revenge, let's say, but definitely something worth watching, and it could get really interesting then on Thursday, also and especially in terms of volatility to be expected. And that's it from my end. We talk again tomorrow, 10:30 a.m. GMT on the YouTube channel from JFD Brokers. I definitely look forward to it. If you have any questions, please shoot me an email. And that's it from my end. So talk to you again then on Tuesday, tomorrow. I look forward to it. Happy trading. Watch your stops. See you soon. Take care and bye-bye.